Good morning. Welcome to the video conference of Frasle Mobility to present the results for the first quarter of 2025. Before we begin, we would like to make some important announcements. This video conference is being recorded and after completion will be available in our website, ri.fraslemobility.com. We have simultaneous translation into English. To access it, simply click on the interpretation button represented by the globe icon at the bottom of the screen. At the end of the presentation, there will be a question and answer session. Questions can be asked in two ways: through audio, showing interest by clicking the raise your hand icon, or in writing by clicking the Q&A button. Furthermore, we would like to emphasize that the information covered in this video conference is not a guarantee of performance and involves risk and uncertainties as it refers to future events and therefore depends on the circumstances that may or may not occur. We'd like to thank you for joining us in another earnings video conference. We have with us today our COO, Anderson Pontalti, Business IR M&A Director, Emerson de Souza, our IR Manager, Mariana Guimarães, and as a guest, Randoncorp IR Finance Director, Esteban Angeletti. I would like to record the presence of Randon that's being a part of the video conference. Now I pass the word to Emerson that will conduce the presentation. The floor is yours. Good morning, everyone. Thank you for the participation on the video conference of Frasle Mobility. It's a pleasure to talk a bit about the results of the first quarter. I'm going to start off with a bit of the Frasle agenda in the first quarter. We had the pleasure to inaugurate and advance a second headquarters of MoveTech, or Advanced Engineering Hub at Sorocaba, together with the manufacturing unit we have. We have advanced in this local with our OEM business. It's necessary to have tests and validations in that unit to be more fast and assertive. This happened during the months of March, and we'd like to record it. Also, March 20th, another relevant fact, we announced an important operation regarding corporate governance, which is the change of Sergio in his role of CEO, President Director, and the leadership CEO will be in September be held by Anderson Pontalti, our current COO, and Daniel Randon, which is a member of the board currently, will take on the position of president of Frasle September 1st. So Daniel and Anderson in new roles, as we saw here. No doubt we have space to be closer to the market with this new configuration. We'd like to thank Sergio for his dedication. Until September, he's with us. After this moment, we do the announced changes. We also had an important fact. We also always highlight as a company connected to automobile consumption, one of the big values we have are our brands. And in a repositioning of the size, due to the size, referencing quality and the size of the market that we have with our brand Controil, we revalidated its positioning, go with confidence, go with Controil, and the new visual identity of the company, more modern, connected to the current leadership moment of this unit in terms of Brazilian market, to continue close and active with our end customer, the mechanics that apply this in their parts. Now to the next topic, I'd like to mention our participation in Automac during April after the quarter's results announcement. It's the biggest spare parts fair trade show in Latin America. over 1,200 exhibitors, over 90,000 attendees in the 5 days of the event. And this event, especially, we got close connected to the end user, some resellers and mechanics. This brings an important impact, showing our brands, showing the launching of new products that we had in the expo, and we got together the community of investors in the market for a chat one of the days of the show, so we could show our strength in the spare parts market that's so distinct in the automobile market or sector. Now, talking about the highlights of the first quarter, making a reference to what we had, to the link to the guidance. Recently, we closed with a revenue of 1.3 billion reais, which is close to 60% above what we did for the same period last year, and very much connected to what we have in terms of range of our guidance to 5.7 to 6.1 billion expected for 25. Our revenue in a foreign market add up to 125, close to 125 million, increasing 80.5% compared to last year. Also close to our range of guidance between 500 and 540 million in foreign market. Not only what we exported from Brazil, what we generated in our foreign units. This is a meaningful increase. It's directly related to the arrival on a console from this year. Important revenue coming from this operation in Mexico. We had an adjusted EBITDA margin of 19%. The adjustment regarding what we did are detailed in the result review. We're going to mention them here. Notably, the margin is a bit above, but we do the adjustment to show the real situation and runway of the company, which is almost 1 percentage point above the first quarter of 24, and in the middle of our guidance that was between 17 and 21% for 25. The investment add up to 21 million reais, aligned to what we did the first quarter of 24. And the investment, we cannot look at them only their current position because we are programming to purchase equipment. We have a range of 170 to 210 million expected for 25. Going to the next chat, I'd like to talk about Consa or Dacomsa or Mexico operation. They're part of Fras-le results since January this year. When we concluded the acquisition transaction, we have the detailing of this movement in our documentation, the video conference that we held specifically last year during the signing of this transaction. Dacomsa is already close to 25% of Fras-le revenue in the first quarter, and the Mexican market is becoming a very relevant market to us, the second biggest market. When we look at all the Fras-le mobility, only behind Brazil, it already brings an important contribution in this start. In the first semester, we're going to talk about the range and what we are exploring as synergies. Obviously, 2 months and a little bit, there's not a lot of material to show, but I'd like to reference that we have 10 work fronts implemented, of which with positive perspectives like sourcing, manufacturing, fronts for increase of revenue with launch of new products, commercial integration, administrative integration, management of change in many aspects were very positive, and the reference numbers of the synergy for this unit will be reached here. I hope that we can have more news in the next semesters to surpass them. Mexico is going through the changes and difficulties that we have regarding the tariff issue with the United States or several markets, especially because Mexico, its economy as a whole, is very much connected to the US market, and eventual difficulties can bring impact to the Mexican economy. But our market for spare parts is very resilient, and we don't expect uh, air aftermarket are, you know, even more what we do from Mexico to US are small, 5 or 6%, and they don't suffer the impact due to the free trade agreement that is valid till 27. In the next chat, I talk about revenue, and obviously, as I said, adhering to what we expected, this growth with Dacomsa is very important in this moment, known by the market. We started the year of 25 with this good news of incorporating an operation that the expectation is 1.7 billion in revenue this year. It's on track. We changed a bit the configuration of the revenue of the company. Mariana will detail where the international exposition, the international exposition is higher than the domestic market already. And in what we designed for the Fras-le strategy, the friction adds up 42%. 5 years ago, it was 95, 92% out of everything we did. So a change in the product profile and the mix of what we sell, adding spare parts for motors that are 15%, a market that we're learning. We're very excited with the possibility to increase and be very much connected to offering products for this type of component. You can see here that from the last quarter to here, we have almost uh, a CAGR in this period of 21. This will accelerate to the next quarters compared with the Consa arrival. That's my part. I come back to the Q&A before I hand it to Mariana. We're gonna talk about the Consa topics, a topic that we are waiting for questions that is leveraging the company with the acquisition and the impact of the need of the working capital. Part of the leveraging of the company was completely connected to the adding of working capital that we purchased from the company. One of the works that we did in this moment to consider our working capital strategy for the Fras-le mobility policies. This is a winning decision that we have mapped for this operation. Mariana, the floor is yours, and I come back for the Q&A in the end. Good morning, everyone. Thank you for participating in our video conference. It's still about revenue, slide 9. We see that the company is finishing this first quarter with 91% of its consolidated revenue linked to the sector of aftermarket. The highlights are internal market, the increase of 21% in this quarter versus 24 reflects especially the growth of aftermarket, increase of productivity, positioning, and assertive pricing. On the other hand, the decrease between the fourth uh, quarter of 24 and the first of 25 is due to the economic uncertainty that made the distributors have a more assertive action. The distributors is still heated. The external market, part of the growth is related to the Consa. The Consa, the growth is linked especially to the increase of exports of brake pads for heavy vehicles to the United States, the gain of new OEM in India, and the restart of exports to Argentina. Slide 10, we see the EBITDA causal that brings in each line of the results. I would like to highlight that the sales of the Consa as an impact of the Consa is due to the high price of fuel and volume exported to Argentina. Administrative expenses reflect the incorporation of over 2,000 collaborators coming from the acquisition. Besides this, the expenses with M&A add up 5 million reais in the quarter. As you know, considering M&A a core competence of a company that's growing, we don't consider this expensive for the adjusted EBITDA as a non-recurrent event. We had the restructuring of Fanacif with a liquid net impact of and the other impact of 3 million. With this, the adjusted EBITDA was 253 million reais, with a margin, EBITDA adjusted margin, with an increase of 0.9, as it was mentioned in the beginning. Slide 11, we see the main variance of the operational cash flow. We see the negative. There was This is the low availability of cash flow due to the payment of acquisition done by in 25 and lower gain with exchange variation, considering the Argentinian peso year after year. In the expenses, there was an increase in interest rate and linked to the debt of the company and the high rate of Selic. Regarding the variation, the need of capital, cash flow of working capital, the variation comes from the Consa that had a high stock level and the deadline for receivables with Fras-le Mobility management that's being worked and the synergies explored after the acquisition. Extra Consa, we would like to bring to you that the variation is more or less 253 million negative due with the impact of the restart of the imported products through Argentina and the reforce of the supply of Extenda due to the change in the system and the operation. Now going to slide 12, we see that the company closes the first quarter of 25 with the profit of 35 and a margin of 48. The biggest impact from expenses due to the increase of the debt. The effective alíquota of tax was 25.5%, almost 10 percentage points lower than the alíquota in the first quarter of 24, especially regarding the reduction of the profit tax taxable related to the acquisition of the Consa. Regarding the debt, we conclude the exercise with 1.7 billion reais, a capturing of loans and amortize 156 million reais. Our financial leverage reached 2.6 times the debt, net debt. In other words, adjusted EBITDA of the 2 months with the Consa, the company would finish the quarter with 2 times the leverage. Still, regarding the acquisition, we should highlight that the payment for the transaction is 2.2 billion reais, then 753 million was captured by the simple debentures, 900 million were captured by the Consa, and the rest was from the cash flow of the company. We highlight that the end of March, we have 100 million has for total liquidation of the operation. Now I pass the floor to Anderson, our COO, to comment about the perspectives for the next quarters. Anderson. Thank you so much, Mariana, Emerson, Monica. Thank you for everybody that's watching us. Once again, thank you for those that were with us in Promec in April. Talking a bit about the future without talking about forgetting to talk about the quarter. Another spectacular quarter in the history of the company. We were reflecting the revenue. 1.3 was the revenue of 2019. 6 years previous to that, in one quarter, we did the revenue of 1 year, adhering to the strategy to increase revenue in external markets for geopolitical protection, increasing the diversity of products and strong in aftermarket because this guarantees revenue and future conversion. We continue very excited with aftermarket, despite we have a small retraction of the sale to the distributors compared to the previous quarter, but there are three important factors that we should highlight. The first one here, there is a natural pre-buy that in the vacation season, our customers are ready, the stocks ahead of time. They should be ready to supply the market during an intense repair during the vacation period. There's an accommodation of stock in the chain due to the cost of capital. With a higher Selic rate, people are more diligent with the purchasing level. But the good news is that we monitor the sales of our customer, and our customer continues with sales above in 8 to 9% compared to the previous quarter. So we are very happy and very optimistic regarding the resilience of the demand, not only in Brazil, but Mexico, Argentina, that are very important geographies for aftermarket. We see the instability of the trade war. We have followed we want to act independent of the dynamics of the tariff imposition that might come. We can explore this in detail if you desire. The cost of capital has changed the profile of consumption. I've talked about my the stock that's lower, but CPS starts having the problems with debt, then you can delay or seek for cheaper parts. It's normal in the cycle, but as a counterpart, we talked about the retraction of originals, 7% increase. The fleet increased 7% compared to what was produced in the first quarter last year. New vehicles, in this case, we have a invested constantly. Promec is shows Frasme mobility with mechanics making our brands more desired, independent of the situation that we can see. It will have a good memory of a brand that brought good experiences, helped in his training. We also foresee a good second semester in Fremax in Joinville. The capacity installed after the substation will be increased in 25%. This will allow us to expand the opportunities of exports and domestic market. And Controil has changed its profile despite being the Brazilian company for that type of product, the most complete one with a Brazilian footprint. We're experimenting to see a diligent manner so we can navigate not only the domestic market, but Latin American market, where we have many opportunities. Very happy, despite the numbers shown by Emerson. We're very happy with the Consa beginning, not only with the results, but the way that we're doing the cultural integration, the integration of the teams, the identification of opportunities are very much beyond what we expected. In several moments when we were able to talk, when we do an acquisition on this side, the buyer side, you idealize a series of opportunities and synergies, but once the bought part enters the circuit to the debate, many other ideas come to the table and increase the potential of the original ideas. What I can tell you is that we're very happy and very optimistic regarding the delivery, the promise of value added in that region. We continue strong. Market is still resilient. Aftermarket is resilient. We are prepared for any adversity and commercial conflict or any other conflict that can come up. Thank you, Mariana, and thank you, everyone. I return the floor to Mariana. Thank you, Anderson. Now we start our Q&A session. First comes from audio, Fernando Urbano, CEO side of XP. Fernanda, welcome. Your mic is open. Go ahead with your question. Good morning, everyone. Thank you for this space. Thank and congratulations for the results. Two questions from our side. First of all, I would like to ask regarding the organic growth. We saw a healthy level in the first quarter, especially in the domestic market. And you mentioned a few factors at the end of the presentation, like the positive flow in the workshops offsetting a reduction of stock on the side of the customer. I want to understand better the drivers of organic growth, thinking about the sell-out of your customer average ticket in the workshop and the price positioning of the brands. I want to understand this dynamics to understand how this positive dynamics was the growth of the market. How much was your gain of share? That's the first question. Second question is regarding the leverage. I want to know if you can share what you have considered as a base scenario for the leverage at the end of the year, considering the expected synergies with the Consa. Thank you. Thank you, Fernanda. The first question, Anderson and me can complement each other. Overall, we talk a lot, and 92% of our business is connected to aftermarket. This is a very resilient market, a market that has a lot of strengths when we talk about a crisis moment or credit restriction like we have in the current moment, especially in Brazil. Obviously, today, over half of the Fras-le Mobility business is not Brazil anymore, but this market is good everywhere in the world. We advanced to UK, Europe, and United States, leadership in Argentina and Mexico. This continues for all markets. When we talk about Mexico, the only operation that's non-recurrent this year, we have a growth of between 15, close to 15%. This comes from gain in aftermarket share, but we have advanced a bit in OEM, OE, OE market, new in the business in the United States, Europe, and Brazil also connected to the electric line. Adding up these small business in each geographies, this it gives an important sustaining for the organic growth of Fras-le. We had a restart retake in Argentina that doesn't reflect very much in revenue yet, but we launched products there that we wanted to. We since 2015 we didn't launch new lines or reference due to the restrictions we had connected to the governments that limited imports. We don't have this anymore. We have advanced. That's why we have a higher stock now there to be able to continue to be leaders and to service our customers in Argentina the best way possible. This year, we want, I don't know if you want to add anything, but this is basically the ecosystem that allows us, we talk about recurrency, to have a unique condition to be able to continue to grow at least for some time between 10 to 15% organically with the market position that we're still seeking, and also due to the complexity and diversity of markets that we serve. Sometimes one market has more difficulty and another is growing more, but this is part of the beauty of the business that we've built. If you allow me, Emerson, thank you, Fernanda, for your question. Bringing in numbers, it's important. The aftermarket market doesn't grow more than 1%. The parts demand is resilient, but the growth is not very high when we look at volume. There's not a price factor that's meaningful in the first quarter. We did have a leap of the dollar from 627, an important peak, but it accommodated. So we have a little variation of exchange rate that we look at the first quarter accommodating the inflation, not allowing that price advances were applied in a meaningful way. What we notice is that the customers, distributors, a consolidation and a strong advance of branches, new branches of the distributors. We see they gain market share since Fras-le is the biggest manufacturer for aftermarket in the country. We are together hand in hand with the main distributors. They increased the sellout of all parts. They sell in 9% in the first quarter. And we collect data, sell out 80% of our sales, more or less. Very relevant. We have the data effectively. When we look at our parts, we grew 14%. Their sales with our parts increased 14%. This is a reality in Brazil. Argentina, we have gained market due to the possibility of introducing references that couldn't be introduced in the past due to the limitation of imports. So we're developing the portfolio, and we were talking about 3,000 of shock absorbers, and now we're selling 30,000. This is a leap of tenfold, which is very relevant. We're surfing important waves of market share in the geographies. We acquired Nakata. Nakata didn't have in their product line over 20% market share in their lines. We unlocked the capacity, unlocked working capital to develop product lines and develop new increase in capacity, new part numbers. We're still having gain in market share in operations. Fremax cannot gain due to limiting capacity that will be unlocked importantly second semester. I think that one of the greatest value creations, despite M&A being very important in the synergies or gains, organic gains of market share, are in fact very relevant and consistent during the last period. Adding also, if we exclude friction, that today is 45% of the business, we advanced also meaningful in the light line, recovering historic positions. Today, we have the best position. We didn't have the light line market position that we have today any time before. We have over 60% market share. We always grew. We have space of increase of 25%. We can increase even more. It's still a driver growth for Fras-le. To the second question, leverage. We don't have a driver for leverage. I want to mention, connected to the Dacomsa, as Mariana explained, the origin of the resources, the majority of the acquisition came from new debt around 1.6, 1.7 billion reais. Purchase was leveraged. Part of the leveraging is in Mexico. It's good. The operation will pay for part of the leverage. What we have in terms of work to be done to reduce the leverage first. In the first quarter, we had prepared a change connected to Nakata in our RPS AP system. The last synergy from Nakata, it's integration, incorporation, and this is important to explore. We had this prepared to happen in March. We loaded the stocks of products manufactured by Nakata, so to serve the market, even if we had and avoid systemic problems. We didn't reduce the production due to seasonality or difficulties like the tax war, trade war with the US. The measures announced by Trump government, this didn't affect the year, but in February, we had higher stock that's connected to that. We added a relevant amount of working capital at Dacomsa. Dacomsa has almost twice as much the use of working capital when we compare to Fras-le. There's a lot of opportunity to improve this. Those that follow Fras-le for not so long, evaluate the acquisitions we made, Nakata, Fremax. We always worked attenuating the working capital, more connected to our model, to our policies. Aconsa specifically has a distinct characteristic from other acquisitions we made. It is also a big part distributor in Mexico. They have their own distribution channel, bigger than what we have in our operations. We have in Argentina and UK, but the Consa with their size brings this, and we know that they need to find something in a middle ground, closer to Fras-le, the reality of Fras-le and the reality they have. So inside the synergy scope, there's a lot of space to lower the leverage, and this will happen. We won't do this in an ordered way. We need to keep the support to the customers, keep operation, and in the next quarters, find the right point to remove, reduce, especially stock. Production stock, production, we're working on it, but the impact will be noticed in the next quarters. This type of work that won't be done this year, it's a bit longer. With this, if we looked only at the operation, we have an idea of closing March with twice what we have today, but there's still, we can have positive news due to the work that we're doing here with working capital. It's not something fast, not overnight, but our focus is to establish the synergies that come from expanding integration in production lines, launch of products, which is what we referenced. A reduction of working capital, reduction of leverage will come, but will take some more time. Super clear. Thank you, Emerson and Pontalti. Next question comes from Gabriel Rezende from Itaú. Gabriel, you may ask your question. Thank you, Monica. Good morning, everyone. Thank you for the space. I want to talk about the margin dynamics. You reported LQY aligned to what people were estimating, considering Fras-le is delivering, considering the opening of the Consa. I want to hear from you the dynamics of this number going forward. Maybe leave aside the synergy debate and think about the Consa and Fras-le separate, if we can do that, and fit in this point what we see regarding the commodity fluctuation. We see some commodities after the tariff announcement by the US. This can generate pre-buy of commodities on your side, making the working capital a bit worse due to this, proactively to use to have better prices in a certain commodity. And how could this impact margin in the next quarter, positively or negatively? Thank you, guys. Thank you, Gabriel. Anderson, do you want to talk about the dynamics of margin? Yes. Well, I'm going to start with commodities because they reflect margin. We also observe, due to recession, global recession, Gabriel, we see in chemical metal commodities an opportunity to reduce cost. There's a lot of people that are not uh, putting in orders, trying to understand how the sales, the trade dynamics will be between China, US, and Europe. And this has benefited us. We have future contracts being established with margins or better position that we have currently. As a counterpart, the market is more aggressive, competitive on the other end, in the sales end. Above all, Asians want to put installed capacity somewhere. This dynamics points to both sides here. Looking at margin specifically, we have a margin relatively stable compared to previous periods. There isn't a current pressure of a change. Not only talking about commodities, Dacomsa operates with positive, very positive margins. The momentaneous decrease in the, no, the increase of the Mexican peso increase, it gives us better results, increasing the profitability in that region. The dollar of 570 with the level we have today is the level we forecast for the year. If it increases a bit, we have a benefit in the short term due to the exporting position. And and if the dollar decreases this level, we have a reduction in export and accommodation of medium price ahead. We have always this bit of a delay, but we imagine regularity in terms of margin for the year. Upside will come from a fixed cost absorption due to the increase of volume that we are expecting with the next quarters, with the restart of the stock reposition of the distributors, increase in the offers and Fremax, an increase of market share with the increase of availability in Argentina. I would say these are the three relevant points that can bring a greater absorption of what is the installed cost in the operation. I hope I answered your question, Gabriel. Thank you for your question. More or less, this is the vision we have. Emerson, do you like to add anything? Yeah, there is a positive vision by us to start this year and the last quarter, bringing positive results regarding the synergies with Dacomsa. As I mentioned, we didn't bring these things yet because they're small. But as a practice, we want to make it clear for the market so everybody knows that we're capturing. It's very promising. Small initiatives bring a lot of return. I'm going to talk about one specifically. We have a change of raw material that brought not only for Dacomsa, they have the highest benefit, the FITEC operation, where we do the brake pads, brought to Fras-le Brazil, Fras-le United States, Fras-le China, Fras-le India, important savings. In this one raw material, the combination of volumes brought $1.4 million. With a dollar of 570, and we look at 5 years, we see that small movements bring huge opportunities. This is almost 50 million reais in 5 years in terms of savings. Besides this, there are many others that we have the pleasure to share with you. Level of margin that are good with these possibilities of being better with the synergy is a present reality from now on. Despite the market being heated or disputed, we have as a strength the support, customer service, the strength of our brands, the level of service that we provide, the portfolio, the combination of products that we have, the line of products. This makes Fras-le very different when we talk about aftermarket market. Thank you, Pontalti and Emerson. Our next question will be asked by Lucas Marquiori from BTG. Lucas, you may ask your question. Thank you. Hi, guys. Thank you for the call. Actually, before the question, I wish success to all of you with the restructuring, Sergio, Daniel, Pontalti, everyone. My question is one, but it's a broad topic. I have a doubt with the implication of tariffs in the automotive industry. I understand that you didn't adjust guidance. You mentioned the company is prepared, but we have seen many manufacturers OEM, a lot of consequence in the US market, especially they're afraid of recession. I know that parts in the Mexico are USCA, but I know this affects Mexico. I want to understand what are the policies for mitigation that you have under the sleeve to work with the tariff scenario, the capacity of Brazil, changing customers from one place to another? What do you have of options to offset the tariff scenario, especially North America? That's a topic. Thank you. Lucas, thank you for your question and for your wishes. We're very happy also to, with the current situation, if the company continue the good work that the executives hold or do, this change in CEO and president just reinforce what we have as a company to have the best strategies, and the results clearly show that we have got it right in a very positive way and affected the growth. The topic is broad, and Anderson can add. In fact, United States is a very relevant market. We have an Alabama factory since 2008. We have used this factory to service a good part of what we do. Possibility of new business is linked to produce, being able to produce in the United States. In the last 3 years, we did good investment. One of the best equipment that we have for brake pads and heavies is in Alabama, and it's being ramped up at the beginning of production. And we have some business here being analyzed, and we're gonna announce them soon. Important businesses for the future. This is why we made the investment. So we're gonna have more content made in US, and this is relevant. From Brazil, there are some tariffs, heavy line, 10%. What is good is that there isn't capacity in the United States to serve the volume that they buy. Since friction material for heavies, we have our main customer, America, a partner for many decades, and a market leader in the United States. Together with America, we have around 70% of aftermarket, 45% for OEM. It's a small increment of tariffs. We are comfortable that it will not reduce our size. What is happening is that the impact in the economy as a whole. There's a retraction with heavies in the United States. This impacts in aftermarket. The freight levels have gone down 10 to 15% first quarter. This impacts some of our businesses. On the other hand, we have increased the search of new customers there. And it's not from today. We have increased for some time now. And as a coincidence, last year, we have evolved very much with some customers that we used to work. We don't notice the decrease because our customers, new customers are entering the base. And this is very promising, not only in the point that we are today, but going ahead, because there are many businesses being discussed with our sales team there. It has been for us with the Consa, with the possibility of producing closer some items in the light line, bringing to the United States. We think that the impact won't be big. We see a lot more the horizon of opportunities than a horizon of threats regarding the demand we have. Our exposition to Huawei is important, but the protection we have with aftermarket and new customers offset any loss in production or demand from the customers. Anderson, would you like to add anything? Lucas, thank you for your question. The topics were covered well already. Our biggest product more relevant for us is a brake in the United States produced massively in Brazil. I know tariffs are there, but we've produced brake pads in the United States in the past. We produced for Mexico. We're getting to know the dynamics in Mexico, but the volume that's necessary, the market buys a lot of brake pads. Their volume is meaningful and intensive in terms of capital. So the footprint change is the short and middle term is very difficult. This change would happen in a very long term. They have there is installed capacity to supply the product. We know when we operate brake pads in the United States, the difference in cost is brutal, 40 to 50% more competitiveness in Brazil or similar geographies, more than producing in that market. So it's hard that we open a position of an item that's not so attractive globally. The other markets don't look at the pads so much as the lonas. This tariff that can happen will be, in your evaluation, represents small content, a small price for the truck it wears. It's associated to the truck on the road. The American market can have a recession. They have still to be on the road. People will continue to consume. We see a lot of possibilities looking at the Brazilian footprint compared to the Asian footprint. We can rebalance our supply chain, having more supply in geographies that are more pro-Asian and look at our capacity, review our capacity in other markets with a premium price because the tariffs and the opportunities of the market can present. These, unfortunately, Brazil, depending on the sales trade relationship they have with the US, could have a huge advantage if Brazilian industry could have the capacity to cover a good part of that market. As Emerson said, we see more opportunities. Mexico, over 95% of the revenue is in Mexico, associated to Mexico, domestic economy of Mexico. It's very much linked to the United States economy. When the local economies get weaker, we see a small decrease in aftermarket. It won't affect the guidance, Lucas. Thank you. Have a great day. Thank you, Lucas. Next question is by Santander, by Gabriel. You may ask your question. Good morning. Thank you for the space. Two questions on my side. First one, for manufacturing, you talked about the evolution you have had with time. I want to understand how you're looking at the future, what we can expect, and the entrance of the Consa. How is this journey? And you mentioned the organic side, the growth coming from share, Nakata, Fremax growth that will come from the substation potentially. But can you comment more how has been the evolution of Controil and to this related to manufacturing linked to the previous question? Gabriel, good morning. Thank you for your questions, for participating. Well, I'm going to share together with Anderson the answers. Talking first about manufacturing, it's the main initial driver of the synergies that we have to design. Consa already used an import model, good suppliers, most Asian to add to their sales, to complement their sales. We have some product lines in Mexico like water pumps, complementing the joint, other parts related to the motor. We used a different model, less domain, the control of vendors like we have, for example, established in Brazil. We ended up buying from suppliers, first line suppliers, very good in terms of quality, support, technical support, suppliers of OEM, which is great, which is gives you security. On the other hand, they're not the suppliers that bring the best competitiveness exactly due to this, the structure they have to sustain the level of quality control for their products. We have developed suppliers of the same level of quality and support, but more adequate for aftermarket. Aftermarket operates a reference of products that are different from OEM market. So OEM, if you do it exchange, it will live with a used vehicle. We mentioned the example, oil pumps. When you put it in a new operation, you can have leak in the joints because it's not adequate for 100,000 kilometer motor. The aftermarket is different in terms of product, not necessarily is connected to what we offer in OEM due to competitiveness many times, product features, other things that aftermarket demands. So we have made adequate in the model that we have of manufacturing design, have the product aspect, the standards that potentially we have developed this decades ago, connecting also to the model of Nakuch. It's not easy to do, it's not simple. There are several part numbers, etc. What we have seen, the biggest opportunity to increase the levels we have mapped, the products show the upper giant opportunity we have of combining our vendors of co-manufacturing to the importing vendors. We continue with the strategy of complementing products and developing the partners that many times manufacture over half of their production is due to our global demand here. This will continue and will be important in terms of synergies for the Consa and also for our present units. One item that we're debating here, 3% in price reduction comes with the increase of volume. It's not a benefit only for the Consa, but the competitiveness and the margin of Fras-le Mobility as a whole. That to me is maybe one of the areas that we're going to grow the most and expand as the core of the company based on development in Asia more than we have currently. Regarding organic growth, I'm going to leave it to Pontalti. He's going to talk about control and the connection that we have with manufacturing of some items to expand to the Americas with control items. Thank you, Emerson and Gabriel, for your questions. Specifically, control, we have since last year the tragedy of the floods in Rio Grande do Sul. We already had a plan of increase availability to increase the offer of control on the market in Latin America. Latin America. The focus is no longer Brazil. Control launched their new brand due to what we reached here. We understand that the portfolio of Latin America is wider, more complex, and we need our partners of co-manufacturing to be able to supply these markets. Nakata didn't have this developed, neither With Control, we had it, but we decided to use the process, the means that we have in Fras-le Mobility. With Nakata, we started to develop partners for these product lines. We accelerated very much due to the floods that I mentioned, to the extent that in the end of the year, we had an offer of level of service very adequate for the Brazilian market. We are supplying the market very well. Controil always had difficulty to supply regularly like our other companies because the product line took 2 to 3 months to be manufactured. The market doesn't have another company like Controil in our market. In some moments, we couldn't supply, and now this doesn't happen anymore. We gain market share. A company that has a revenue of 21 million and monthly revenue has a potential of growth, especially in geographies in Latin America, more specifically Argentina and Mexico. It's a market that we will explore, but the good thing is we have a chain developed. This gives us speed to reach markets and offer to these markets. Controil is a company that produced 100% of what they sold, and it's will be a company that will produce 60, 70% of what they offer, of what they sell, so we can navigate other geographies and have more speed with great level of service. We're very happy with the future. The footprint is more robust to serve the market with Controil. And it's not going through Controil. Controil brand is produced some places in the world, and we supply all of our distribution operations worldwide. It's very positive for us. We didn't ship to mature markets. There's a lot of space in Latin America. For let's think about Latin America, closer market, where the brand is better known. We had some experiments in the past with us. It's easier to enter once we have this robustness in Latin America. Important volumes with manufacturing, we can think about going to more mature markets with purchasing power together with the partners. I would like to add here, we have gained important strength in the light line market in brake pads and friction material. The last years we grew 5 percentage point, sustaining the best position we might have had in history. This moment we're launching strong with the Fras-le product line, ceramics, that has organic growth also. Good initiatives in different areas. You mentioned many times our dream of having leadership in shock absorbers. We have advanced consistently with this, with being cautious to have quality margin, invested heavily in the manufacturing in Estrela for shock absorbers. We brought support of raw material purchasing that we have connected to Randoncorp and with the leverage. This brings an advantage that other competitors do not have. Thank you. Thank you, Gabriel. Next question from Luisa, Southside Safra. Luisa, welcome. You may ask your question. Good morning. I would like to understand better the margin, gross margin composition, the decrease we saw. What was the biggest impact? There was a stop for 1 week in Argentina. I want to know how much this affected and the other reasons that we saw the decrease. That's what I had on my side. Thank you. Lisa, first of all, thank you for your question. This adjustment, the decrease in the gross margin, is very much connected to the mix of products that we're selling currently. there isn't something outstanding that we saw that we could bring a difficulty. We do have, yes, higher competitiveness in heavy friction area or sector. It has been one of the areas that is more competitive. We didn't give up in price, but we have tried to seek many ways more competitiveness, more intensely in production. It's one of the most automated lines we have. We have one of the biggest manufacturing plants of in the world of this product. We're competent and competitive, but this is one of the markets that has the tightest margins. And there's a regular dynamics of markets. Some items, especially Nakata items this quarter, the beginning of February, might have an impact in margin. Structural, talking about structure, there aren't any points, a red light that could say this is a trend. It was the impact related to the product mix that we sell. I can add also, if you allow. Thank you for your question. There's a margin dynamics that's more regular due to the market being more open. If we look at gross margin today, the Fras-le Argentina is where we have a reduction of margin. Remember, we had a speculative sales in the past of the opportunity to become profitable. We needed to protect stock and keep the market serviced. Now the market is more regular, the competition is more open, and the business dynamics is closer to a regulated normal market. As a consequence, the game changes and the margins accommodate. Remember that Argentina, a good part, almost all, we have margin on margin because a good part of what is sold there is produced worldwide. So the combined margins are always healthy, but it's a market that brings margins to a different level that we have navigated, and this is happening systematically. We're increasing revenue, we increased volume, but the margin level, it's a more normal margin level, a regulated market margin level. Okay, great. Super clear, guys. Thank you. Q&A session is finished. I pass the floor to Anderson for his final words. Thank you, Monica. Thank you, everyone, for being with us. The quarter is very strong. We continue strong. We're optimistic regarding the future. The Consa in the beginning of the talk together has a promising future. It will take some time to see the results in the balance sheet. The stock is still high there. We're developing the product portfolio, designing the routes in 10 work groups to create value. So we will see more in the end of the year, but a high likelihood that we will have good benefit in a good year for 26. I thank you for your participation. Have a great day.